All right, so let's start. So for the one who doesn't know me, my name is Mauro. I'm Italian. I live in United States. I'm a trader. I started trading like almost 6 years ago already, and I'm profitable on the long run. I'm funded. I have two funded account and a personal one. And this is what I do the most. Normally, I used to trade only London because then I dedicate the other part of the day on other business that I have. All right. So normally I start my day on the daily. I just take a look. Okay, just a little bit of this is probably the first difference that you will notice with me. Okay, so I am very interested on watching more than the key levels or whatever you want to call it, obstacles or whatever you want to call them. I'm more interested on liquidity grab on the higher time frame. When I talk about higher time frame, I'm talking about everything that it goes from daily-ish, because I don't have to, we don't have to forget that in my case, I'm an intraday trader slash scalper. So daily is a very high time frame for me. But everything related from H4 to M15, I consider this for me high time frame. And everything is down to M15. I consider that one my operative time frame where I place trades and so on and forth. Okay. So, but anyway, starting from the day, I normally approach at the end of the Asian session for me. I'm in Eastern time. It goes from 5 p.m. Eastern till 2 a.m. Eastern. So when I approached it this morning, I noticed that the price basically took the previous daily low, okay, which of course is liquidity at the 4-hour time frame, because never forget, okay, at any time frame you are, every single high and low of the candle is a 3-candle formation somewhere else, okay? So this is liquidity. So took the liquidity of the daily and approached, if we want to call it like that, to the previous candle, daily candle with, if we want to take, you know, the closing price, okay, at the previous daily candle, okay? So then I went to 4-hour, of course, and I noticed that the price took the Asia low, okay? As you can see, what I was telling you before, okay? If you watch at the previous daily low, okay, is a 3-candle formation on the 4-hour, okay? Here it is, okay? 3-candle formation equal liquidity. Now, with that being said, also,
All right.
okay, we had, let me just do this. So, okay. So, what we had also, we had the Asia, basically that was taken already, okay? But the majority of the things that I was putting my attention on was the grab of this 3-candle formation on the 4-hour. Now, every time we have, of course, a grab of liquidity in one direction, we have to expect a reaction on the opposite side. Okay, so if we take, let's call it sell side liquidity, we will have an opposite direction on the other side, but we need to have a range. Okay, so once I see the liquidity grab, what I do, I start to going lower to define the time frame until I find my range, until I find my two opposite QM. Now, just to give a little bit of insight on the 4-hour time frame, we broke a strong high. Okay, so basically we have on the daily, because a strong high on the daily is gonna be a QM. Sorry, a strong high on the 4-hour is gonna be a QM on the daily. Okay, so meaning that we have a range on the daily. Okay, so this is our 4-hour took. Okay, meaning that now we have a bullish QM on the daily. If we want to mark the just, you know, for information, we have what? We have a bearish range on the daily, right? Because we have a bearish QM and a bullish QM on the other side. So this is a bearish range, okay? So let's go back to the 4-hour. So we broke a strong high. So if we wanna work with a bias, which I don't, but if we wanna have a bias right now, we are back to bullish. Okay. I hear some kind of echoes on my here, so anyone probably and let me do this. Okay, I'm gonna mute you all. Okay. So so what I do at this point, as I told you, after I see the grab of the liquidity, okay, I want to start to look for a range. Okay. So let me cut the market. I was around, yeah, 3. Okay. 3. Okay. After the grab of liquidity, we have a liquidity grab on 4-hour plus what we have the Asian liquidity, which it's very important. It's very powerful liquidity, right? So I can expect from now on, any minute I can expect a reaction, but still I need my QM. Now, if I switch in 1 hour, okay, what I have here, I have a strong, but I don't have a low. When I say I don't have a low, meaning that my range is not closed, so I'm still bearish because my QM is over here. Okay, so the price needs to take this high in order to have a bearish range on 1 hour. So what I do, I keep going low. So I'm going to the 15 minutes, okay, and in 15 minutes, either also what I have a strong high, internal, yes, but strong. I have a strong high over here, but I don't have still a low because I don't have a QM in between, right? So I am going to the 5 minutes. Okay, when I go to the 5 minutes, what I see the price that is about to give me a QM. Okay, why? We have here stop hunt or swap of liquidity, whatever you want to call it. Plus, this is going to be my QM in case the price take it, right? Now, when I have a QM, the first things that I have to do is to look for my immediate strong high, the closest one, all right? So in case the price take this one, where is going to be my strong point? This is going to be my strong high. Why? Because it takes liquidity to the top, right? And break the structure, okay? Break eventually this impulse, break this low, but also the major low on the 4-hour, right? So I have a range, okay? Now I have a range, okay? I have a bearish range, okay? Bearish range on 5-minute time frame. Now, this is when I notice that the majority of the problem with most of the people comes that we made a confusion between how to manage bearish range, okay, or bullish range. Most of the people, what it does, most of the people, once we have a bearish range like this, okay, what they do, okay, I have a bearish range, meaning that I can get somewhere here to go long. Wrong. Okay, this is wrong, because to go long, you need a bullish range. Okay, now we have a bearish range, meaning that we need to find our PO high inside here, okay, and place an entry around here after the price take the internal liquidity to attack the external liquidity of this range that I am visualizing in 5 minutes. Okay, so what I do in order to find my key level, I start to going to higher time frame. Okay, in 1 hour is too higher in this case, so I will try, let's say 2 hours, still too high. Let's see if 4 hours show something. Okay, the 4-hour time frame, it's is showing this unmitigated week, right? So I take the unmitigated week, and I can do any kind of refinement if I want, but I don't want to talk about this because it's going to be confusing right now. It's just I want to give you an idea. Okay, I go back to my 5 minutes. The things that is important is when you go back on your time frame, you need to see if close to your entry point, because of course the trade here, it will be short with your entry, place it here, right? Okay, and targeting the external range liquidity. Okay, the question here is close to my entry point, do I have liquidity? Yes, I do. is immediate, okay? It needs to be immediate because remember, price is not interested in your POI. Price is interested and moves after taking liquidity. So liquidity is the fuel that the price needs to move from one price level, one level of price to another one, right? So yes, I do. So my entry is okay. Okay, I place a little bit higher. Okay, and then I let it go. Now, if I believe, I mean, in my way of trading, okay, this is not the I'm not doing this and then I forget. So I want to also go long. Why? Because I can do it. Because basically, if I work on the liquidity grab, I have liquidity grab in 4 hours, okay? Meaning that I need to expect a reaction on the opposite side. So now, the more the liquidity that the price take, it's a higher time frame or important, or it's a pool of liquidity, a more deeper reaction I can get from the thing. So this is something that cannot be explained. This is something that you need to it's like a feeling that you need to get with experience, okay, while you use this method. So, but I go to 1 minute at this point, okay, and all I have to do is waiting for a bullish range. Okay, I have my QM in 5. Perfect. We can normally I put 5 in between, so I know this is my QM in 5. So now, as you can see here, what is my, if the price break this low right there, what I have a QM in 5 minutes, in 1 minute. Okay, I have a QM in 1 minute, and then if it does, I have a range. I have a range that goes from here to here, bullish range. Okay, so I can, after the price take the internal liquidity, I can look to go long till the external range liquidity. So I wait, perfect. Now I have a range. I do the same process. I go back in time and so on and forth, but I can tell you, normally when I operate on 1 minute, I spend a lot of time training myself that I don't have to do this all the time. And this is something that I recommend you to do. If you want to have this kind of style, you need to be fast and quick, because sometimes the price doesn't give you the chance to, like, if you are at 1 minute, to go higher and start to do all the process to figure which is your POI. So what I can see immediately here is that I have this breaker, okay, and which is just below my internal liquidity. Normally, if it's a little bit far, I put the entry just at the liquidity, okay? But something that I do is always the same. I put my stop loss at the external of the range, or at the strong, or whatever it is, okay? I don't do crazy things in between and so on and forth, okay? Because I create my edge, okay? So, and from here, I can go long. All right. So I put a long here, right? And I'm going to target this high. Okay. So the price missed my entry. Okay. As you can see, took the QM and flew away. Okay. So I go back to the 5 minutes and I keep going and see what happened. Okay. Okay. Now the price in 5 minutes give me what? Give me a QM. Okay. So I have the same range, just switched. Okay. So it took me in after the QM, because the process is the same. I have a bullish range, and now I can target this high. Okay. Now, in order for me to have an edge with this trade, because I don't know if this trade goes to the target, nobody knows. So I also want to go short. Okay. So what I do, I need to wait for a short range. Okay. So now I have this range. I targeted the external liquidity. I keep going. All right. I'll show you this. Okay, perfect. Now what happened? If you see, now we have another range. Okay. And we have a bearish range, because now what we have this point, okay? And we have this low, okay? And we have our QM, which is this one. So I have strong, I have my low, range is formed. I can place the entry over here, okay? Which is somewhere over there. I want just to give you an idea about what I do, okay? And I can place my entry short from here to here. Now, this trade that is going to target, I took the QM, is gonna be in break even, okay? And this one is gonna be my new entry to target the low, okay, of the range. Why? Simply because nobody knows what the price does. And this is the reason why also I don't care about T1, T2, wherever it is, a failure swing, because with this way, I always have to have an edge. Okay, so what does it mean an edge? Means that due to the reason that I never know if, and nobody knows, if my trade goes till the end, because many times we see trades reaching the high point, okay, reaching the target and then doing this. All right, many times happen. And we cannot anticipate this stuff. The only way is keeping trading the range and also sometimes trade against yourself, because in this situation, one of the two needs to go to the target, okay? Because you have one buy with one idea, and on the same range, okay, you have the short, okay? So, and in this case, price, you see, does exactly what I was telling you. For a few pips, miss the target and go to take the low, okay, of the lower low, all right? So now that we took the lower low, the process start back again. So we can go back to the 5 minutes and so on and forth. So we go for the most recent range and we start the process back again. So basically, this is the way I used to operate. I used to, during London, to open kind of sometimes also 10 position. Sometimes, of course, it's I lose. But at the end, trading in this way, I'm always in profit. I'm always in profit because one, let's say that this one, okay, let's make the just a simple way of looking this way that I operate, right? Let's say that we don't put this trade in break even, but it goes in loss, okay? But I'm also inside this one. This one cover this loss way way higher, okay? So at the end of the day, what is important if because I trade both sides, it's called it like that. I used to call this strategy like that, trading both sides. I'm always in profit just because the edge that I create on this strategy is that a loss is well covered by eventually a single win that is took. Okay. Do you guys have question for me? We can also review the entire session, or if you want to see something else, it doesn't matter. I mean, the way I operate doesn't change, or if you have a question that is not related, it's fine as well. Nobody? All right, then. Well, if nobody has any question on Euro USD on any other pair, like guys, I'll let you be, and thank you for coming, and I'll see you on the next one.
Sorry, I have a
Did
question.
take by a 6? Yeah, sure. Please go ahead.
So which kind of range do you take? Which kind of range that you don't take? Like, for example, that one. I saw it in the morning, the London session, but I hesitated to take it. So while taking a range, what are the factors that you look at too?
Okay. The hesitation is something that, in my opinion, comes when you put your opinion on the trade. Okay, so I have strict rules, and the rules is what makes the way that I trade profitable. Okay, because if I start believing, for example, what is my alpha trade rather than some trade that I don't believe, I'm telling you, because I went there, I end up losing, because what we need to understand is that at the end of the day, nobody knows shit. Okay, nobody knows where the market will go next. Okay, and this is the foundation of the way that I trade. Okay, this is because before I was used to think, okay, I take this trade because this trade is gonna go to take profit, right? And then I was selecting, okay, because I was able to watch, to see them, to spot them, right? But I was selecting them based on my opinion. I say like, okay, this trade, it doesn't go to profit, this one goes. And all the time, the one that I was thinking was not a good trade was the one that at the end went to target, and the other one was the one that ended up losing. So someday I decide, you know what? I'm gonna take them both. I'm gonna start to take them all and see what happens. Okay, without any expectation, because this is the thing. We don't need to we don't have to create expectation, because expectation are based on our opinion on a certain kind of stuff. So now when something happen, okay, when I have a range, I have a range, period. Okay, I have a range bullish, I will go bullish. I have a range bearish, I will go bearish. But also, what is most important in my case is to have the targets that are achievable. I always target the external range of the target. I never think, okay, this trade, I took the long year, you know what? Now I'm gonna target the Asia right there because I wanna do 1 to 50. I don't care. Okay, I know that if uh, um, these trades will go, it will go kill the external. Why? Because based on the fact that I was telling you before, that the price, every time the price take liquidity, okay, gives reaction on the opposite direction. Take liquidity, give reaction on the opposite direction. Now the reaction is proportionate to the kind of the liquidity that the market take. But as soon as we will take this high, okay, the market will give a reaction on the opposite direction. Now, this one is going to create two different outcomes in our mind, because I don't want to deal with the price coming back to my entry point, and I have to deal with, okay, this was almost to target, but end up to being break even. I don't want to deal with all of this stuff. I want straight away, few minutes, go to my point. So to answer to your question, what I need is always a visible range on the time frame that I'm looking. Okay, so if in 1 minute I have two opposite QM, I don't operate without two opposite QM because I don't have a range. I don't know what I'm doing. And that's why I was telling you before, right? So most of the people place entries based on, for example, in this case right here, this has happened just today with somebody that I was talking to on Discord. A lot of people used to have this way of thinking. Okay, I had a QM in 5 minutes. Okay, right here. So I'm gonna place my entry here long. Okay. Now this one was okay just because in 1 minute and then after it give us a QM. But this way of trading long on a bearish range, it's not okay, because a bearish range you have to trade bearish side. Okay. Did I answer to your question?
Yes, you answered to one of my question. I asked it two, by the way. And the range, the following question was that the range that you took, that you always took, I saw that you considered a minor counter trade range.
The length.
So yeah, that range that you took, it trades
the first
on the
one.
buy
The first.
position. Yeah, that first one. Yeah.
The long. The long.
Yes, the long.
Okay. Yeah, the long. The first was based on a QM in 1 minute. Okay. It misses me, the first, but then, okay, there was also a QM in 5 minutes. So I still have, you see, I still have a bearish range, a bullish range, sorry. I still have a bullish range. You see here? This is your QM, right? So your range is from this purple dot to this purple dot, is within this, okay? Once you have your QM, you need a POI and internal liquidity or whatever, okay, to place your entry. And basically the entry was the same that was before. I didn't move anything. It took me in and went to the external. That was the explanation of this trade. I had a range. I had a bullish range.
Okay, thank you very much. But
This was the question.
yes, actually, my other question is that, like, we can see
So
in the market
you
plot.
saw this this trade. This was the one that you didn't took.
Yes, that was the
There,
one that I didn't took, and then the sell. I was waiting the price to go to premium, like, because if you want to sell, you're selling in premium. That's what I learned. If you
yeah,
want to sell, you want to go in premium.
right. Well, I believe that premium and discount, of course, is where you want to buy or sell, just because it's more convenient. But
Yes, that's
I was telling you, my sell for this bearish range was up here. Okay. Then I started trading internally on 1 minute, and every time the market was giving me the chance, because it was giving me different QMs and different internal ranges. Okay. Don't forget that until we break this low, okay, we are doing internal market structure to the 5 minutes bearish range, right? So the price, until the price is keep doing this, right? So basically everything is doing here is internal structure to this 5 minutes range, right? This trade, this idea become invalidated when this low is broken. If this broken, is invalidated. Why? Because in 5 minutes now I have a strong. Okay. Makes sense? So everything needs to be redone from scratch. As soon as the market take this low. Okay, perfect. You see, this one now is not, this idea is not valid anymore, because I have a new strong, so I need to wait for a new QM because I have a new range. Okay. Question is why you didn't believe in this trade? You have your range, you have everything. So it's just about take it. Take it.
Oh, wow. Dealing in small ranges is somehow like crazy, yeah.
Yeah,
And then,
a
yeah,
range is a range. The things is you need to have a space to trade. Okay. The reason why I normally, once the liquidity, okay, I don't trade seconds, right? I don't trade seconds. But the shift in time frames that I showed you, right? From the 4-hour liquidity grab, then I went to 1 hour, and then 15 minutes, and then 5 minutes. Okay, 5 minutes is after the liquidity grab on higher time frame, is the last point that I wait for my very first range. I don't go lower to the 5 minutes to find my first range, okay? That's why I go from 4 hour, 1 hour, 15 minutes, and then I stop to the 5 minutes. Once I have a range in 5 minutes, I can trade the minute. But let's say, for instance, that I don't stop and I'm looking after the liquidity grab in H4, I go directly to 1 minute and I'm looking for my range, meaning that then internally I need to trade seconds. And I don't want to trade seconds. Makes sense? Because I don't have the space. So if you watch at this, right? And pretend for a minute with me, okay? I wanna make this concept clear to make you understand this. Okay, so we have here a QM. And let's pretend that this is after the liquidity grab in H4, we have this QM that is not in 5, but is in 1 minute, okay? Now, if you want to trade this short, it's fine. Perfect. You have a short range, you can trade it. But if you want to trade long now, meaning that you have to find a range in this expansion, right? In this expansion like this, right here. Are you there? Okay. You need to find a range within this expansion. To find a range within this expansion means that you have to go lower in time frame. And if this is 1 minute, I need to go in seconds. Okay? And I don't trade seconds. So if I stay all the time as a first time frame to see my first QM, now I have a QM in 5 minutes, I can go to 1 and trade this expansion. Okay? I don't know if guys make sense.
Yeah, it makes sense. So if you go to the expansion, because is also the expansion same as the higher time frame. Like you have to consider token liquidity, break structure, and then you have internal liquidity, right?
Mm-hmm. Yeah.
To call it a range, right?
Yes. 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 Yes.
Okay, and then on the point of interest, how do you find your point of interest on that lower time frame? Yeah.
It doesn't change. It's basically the same. So what I do is once I have my range, I go to the highest time frame possible. Okay, and I look for the only one available. Okay, so let's say my higher time frame possible is 30 minutes. Okay, the only POI that I see here is this unmitigated wick. Okay, and this is my my POI. In case, okay, the time frame that you are seeing is showing you more than one, I take the one that is close to the available liquidity of the range. The first one, okay? The first one you see. But I am going always to include the low of the range. So I never put my stop loss somewhere here. Okay.
It's
Makes
always
sense?
on the low. It's always on the low of the week or the
Yes,
lowest point.
yes. The strong of the range or the low of the range, yes.
Yes. And then when you place your entry, so you put it on when you marked your point of interest of that unmitigated week, right? And then you
Yes.
TP to the highest points. So how about the spread and your risk, like your win ratio, like risk ratio, risk ratio. Just
Okay,
like
my risk ratio is 1-2.
1-1-2.
Yes,
Oh,
because it's
perfect.
based on the volume.
Yes, true. So
It's another thing.
my problem
Okay.
was like I need to take 1-1-4, and then if I say 1-2,
Yeah.
I'm confused,
Right.
and then so yeah.
Right.
Okay.
You need to here you deal with different things. Okay. So because here you place a lot of trades. So it's based on the volume. Okay. or the number of trade you place. Normally, I don't know how many trade you place during one day, but let's say the average school is teaching you to place one trade per session or one trade per range or whatever it is. In my case, I told you, only on London session, there are days that I take 10 trades, you know? So it's different. Okay.
Yeah, thank you very
Yeah, no,
much.
absolutely.
That was
Absolutely. I don't know your name there. You are asking me why I'm selling my private course for $1,000 is because it's a private mentorship. I teach my way of trading with a specific way of trading with specific rules and with a specific I will say way of learning which you don't find in Liquidity University. Any other question, guys? My analysis for tomorrow. Okay, I don't have an analysis for tomorrow because, as I told you, I trade liquidity. So at a higher time frame. So what I can tell you is that, and also I don't trade with bias. Okay, I don't have this was also something that at the beginning I was struggling with. Bias is something that can be misleading when I stop to have my way of following the trend, because if you think about it, right, due to the fractality of the market, I can watch at the same pair in a different time frame. I can be short, you can be long. So the bias is something that is very subjective to what time frame you are, what are you looking for, and so on and forth. So if me and you, we are on 1 minute time frame and we have a bullish range, we are both bullish, but doesn't mean that the general trend is bullish, right? So I don't trade with bias, but if we wanna watch at the way that normally we watch at the market, what I can tell you is that on daily you had a QM. So now you have a bearish range on the daily, but the market is going to the internal liquidity. Now, also talking about T1, T2 and stuff like that, keep in mind, now the price took this high because this is your daily range, right? This is your daily range, right? So look, if you watch at your daily range, this is your last, the last liquidity that the market took. Now, I see an empty space right there. So on daily, there is no reason why the market should keep pushing up unless you start building it. Because this one now is the only available liquidity. So this high, okay? This high right there. So we have a QM on daily, yes. So we can go to the internal, yes, but still we don't have liquidity over here. So I'm more inclined to think that the market will create liquidity to the downside and eventually ramp up, but still it's something that nobody can say it. Okay, so I will see as soon as I see on a higher time frame liquidity grab, I will start looking for my ranges and trade that one. All right. I hope I answer your question.
Sorry, if
Mhm.
I'm not disturbing you because you
No,
trade
no,
a
no.
lot of, yeah, because you take a lot of trades per day.
Mhm.
So how is your psychology like? If you take like two stop loss, you stop. If I just want to know how you deal with that kind
Yeah,
of, yeah.
That's
mindset?
interesting question. So I had a struggle at the beginning, not with this strategy, the way that I'm trading right now, but I have struggled like everybody at the beginning because I was used to take one trade for session at the beginning, right? So now the outcome of that trade, either if it was a win or if it was a loss, it was creating some kind of excitement psychology level, right? So if I was winning, I was happy. Oh, I understood everything right now. Okay. But if I was losing, I was miserable, thinking like I don't understand anything and so on and so forth, right? So a mix of emotion and also I don't I'm telling you, I was used to have a revenge trading, like I guess any kind of mistakes that every trader go through. Starting trading in this way helped me a lot. Helped me a lot. Why? Because first, you already are considering that one of the two positions that you open, okay, probably we end up in a loss, but it's calculated. Okay, it's different than you place a trade, then you are thinking that will go in your favor and then goes a loss when you instead open a trade that you are already thinking that can 90% go a loss because you have another trade open on the opposite side. As soon as I open these two trades, I'm already start looking for another QM and another range to open a new position that goes against the first one and the second one. So losing is it becomes part of the strategy basically, so you deal very easily because you don't care anymore. The only things that I know is that doesn't matter how many trade I lose, but if I keep looking for my edge, I will end up winning, and this is the only things that will keep me moving forward and looking for new setups. Makes
Perfect. Thank
sense?
you very much. Thank you very much. And if someone were to ask you, how is your win rates? Do you also think about the win rates uh, when you are explaining your strategy or something? Do you consider that? Do you also calculate about that? Do you know your win rates?
Oh, yeah. Yeah. So I can show you my and we can also do this together. So I used to have a very low, because of the strategy, of course. The winning rate is anything between 45, 50%. Okay. But the things is that I did FX replay with, of course, all the data and stuff that in 3 months I did. Normally, you do 120, 160% of the account, even having this shitty, I would say, win rate. Win rate, it doesn't really matter with this strategy because, of course, you lose a lot, but you also win, and when you win, you are doubling or even more. Makes sense?
Yeah, true, true. I'm asking all those questions because I also did it like I traded on period of 2 months, and then I made 180% of my account, but it
Yeah, told.
wasn't that big. And then after that, I don't know what's happened. I don't know what kind of demons attacked me. And then I only withdraw the profits, and then I blow my capital. So but it was
Well,
okay. It was like a break even.
yeah, yeah. As I told you, this way of trading has a very low win rate, but very high percentage of um, increasing the account, right? Point is that it's stressful. Okay, so and you will notice that if you start trading again in this way, of course you will have the same outcome. But due to the fact that it's stressful, sometimes we have the way of thinking that probably going back to the way that we were used to and starting trading in the way we were used to, it's gonna be good. But you will see, because the data doesn't fail you. Okay, they don't lie. Okay, and this is all, no matter what kind of strategy you are using. Okay, because there is not a good or bad strategy. All the strategy, in my opinion, if you test them, if you really make statistic out of them, if you have your edge and everything, are good somehow, right? Problem is that the majority of the people don't do this. Problem is that the majority of the people doesn't want to go through the pain of testing and testing the limits. Okay, so now that's the thing. Range, trading range is, you have to see it like you have a Ferrari. Okay, you have your own car, you have a racing car, and the way you are driving your racing car, it's up to you. Okay, so you can enjoy the view and go slow, or you can race. Okay, you can go 200 kilometers per hour. So it's totally different. The thing is, you need to test it. Okay, and you need to take away all the doubt that you have coming from mastering the strategy. Which, when I say testing the strategy, is not only about taking both sides, ping pong, whatever you want to call it, right? But it's also, okay, like, for example, I see many people having struggle and telling me, look, I have this range, right? Now, let's say, for instance, that this, okay, is, wait, let me do something like that. It's better. Okay. You have a strong that make unequals with another high, right? So now people is telling me, how do you consider this? Do you consider this a strong, or you don't take the entry because it's equals or whatever it is? I don't care. I don't really care. It's equal. I don't. It's a strong. The question is a strong? Yes or no? It's a strong? Yes. I treat it like a strong. Okay, then is equal, go in a loss, perfect. But I know that in the long run, because I tested, okay, the equals that are also strong give me an outcome that is better than losing. Okay, and that's something that you have to test, because if you don't test it, what happened? Right now you see it as a equal, so you don't take the trade. Then you see that the trade was good. Okay, the next time you see the same situation, you take it because the previous one was good and go in loss. So it's a unending circle of like, okay, now I treat this as a strong, next time I treat it like as a equals, and so on and forth. If you treat it always in the same way, and this is when it comes the edge, okay, if you treat the things always in the same way, you end up creating a statistic. Then at the end, once you have at least, I don't know, 50, 100 trades on that particular situation, you can say, okay, fine, now I will always treat this high as a strong, or not, or whatever it is, right? So for everything you do. But this is painful. This is required time. This is required a lot of hours spent on the chart, on mapping ranges, and so on and forth. You know what I mean?
Yes, I understand. And I have one question. Oh, sorry, today I'm asking it a lot. Yesterday I saw something. I was in the opening of was on the London session. I got structure, and then I didn't trust them because there was I considered them was liquidity, and so, and then they worked like a miracle the whole day. There was only work. There was the only structure that were working. And then I ended up without taking any trades because I considered it that there was liquidity. So if you could go like yesterday on the in the London session, I'll have one question to ask you. If you will
Yeah.
consider that it's a, yeah, you could go to the yesterday London session.
50 minutes?
No, actually, you can go even to 5 minutes. Five.
All right. Yeah, sure.
5 minutes, okay.
It is your London session, I guess.
Yes, okay.
Actually, wait a second. Yes. Yeah, okay. Yep.
Okay, that was my London session. Okay, so I saw that break and then it was with a wick. So I say that
break. What break are you referring to? Can you right? You mean this break of
let me
structure
just
here on the
yes,
top?
this
Okay.
one.
Oh, okay. So let me. Okay,
Look
this
at
one.
it.
Okay. Yep.
Okay, it was with a wick, right? So I usually most of the time consider a break with a body handle. And most of the time, I don't consider a wick as a wick. I saw it's working, and then sometimes it don't work. Sorry.
Okay. Okay. Question here is this. Okay. First of all, this comes exactly the example that I was telling you before with the equal size that are strong, blah, 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 right? So sometimes you used to take in consideration the body, sometimes the weak, and so on and forth. Why? Because you didn't create your edge. Okay. Test it. Test how many times the price, when it takes without taking the body, is doing what you think or not. First of all. Second, I don't believe in the fact of the body just for one reason, because somewhere else this is gonna be is being taken with the body, not with the wick. Then if you are referring to the fact that when the price take liquidity for a few pips and then immediately have a reaction on the opposite direction, is making the origin weak and so a trap, I also don't use this stuff anymore. Okay, the only things that I see here is that I have a bullish range. Why? Because I have a QM right there. Okay, and the only things that I have to do right now is looking for my strong, which is this one. Okay, my way of doing is pretty easy and simple. Do I have the QM? Yes. Do I have the strong? Yes. Do I have a POI's internal liquidity? Yes. Fine. I have an entry. If I have an entry, I will place the entry right now. I'm just assuming, okay, because I'm seeing this right now. So let's say this is without the liquidity. So this wouldn't be my entry at this time frame, okay? And because this is a bullish range, I will target the
And
high.
then you will not consider this as a trend line.
I have a strong. You see the strong here?
And then you trust it.
Yeah. Why not?
Okay, and then what's your target?
The high. Now, if I want to go in the opposite direction, I can do it. Okay. But I need bearish QM. I need a bearish QM. So I go to 1 minute. All right. So this one wouldn't be, I would be inside, right? On this trade. Let's say, for instance, just like that. Okay. So I have a bullish range and I'm inside. Now, this is going to be my QM in 1 minute. That's correct. If the price take this guy, yeah, right here. Okay, I'm gonna have my range. So let's go see it. Okay, it broke the low. It doesn't matter. I go back. And if the 5 minutes strong has been taken, means that I have a QM in 15. Okay. Actually, the QM in 15 has already happened. So I have a range in 15 minutes. See, when I say I don't care about the losses, because now I have a range in 15 minutes. So I'm going to find my most close strong from the QM, which is probably this one because there are no datas. Actually, it's this one right there. Actually, this one right here. Okay. And I'm gonna get ready for an entry long here. But again, I'm still I still need to find a short entry. They never give it to me. Okay, let's see what happens. So here gave me a QM. I need to find now a range, which is from strong. Actually, I have a range in 5 minutes because it took this high. You see this one? See this, the QM in 5 over here. This is the QM in 5. So this is my strong in 5. The process start. So I need to find my key level. This is the internal, looks like the internal range liquidity. So I go to 1 hour. Okay. I'm gonna take this candle, but most likely the other one because this one has been mitigated. Okay. So I will take this. Like this. So I go back and let's see what happens. But I have a bearish range, so this is what I will do. Short from here, target in the low. Okay, and if what is it?
Yeah, right there. On that high that you mentioned, in that one you execute on, would you not consider it as a liquidity because it has equal highs? Let me just mention it like right this.
Equal, this one equal highs? This one?
No,
Or,
those two, those two.
oh, no, it's if that is my POI, if there is my POI and I'm fine with the stop loss, I will not make any refinement. You see, this is the things. I don't care. I don't care if this one equal. These are all things that are stopping you. You know, you have kind of analysis paralysis, you know what I mean? Because you see many things, but you see also the opposite. So if you start doubting of everything, you will never take a trade. And when you take it, you trade being scared because everything can happen in the market and everything is the opposite of something else. So have your set of rules and just use that one. Then at the end, when you test your rules, okay, and you have a good outcome, you can say, okay, this works. I take this, I put these other things in the trash. You know what I mean? So it's you will always have something that it frees you and say, okay, no, I don't take this because this looks bad. I don't take this because, or
That's the kind of life I'm living. I just see a trade, I see everything, I can read everything, can see QMs and then
well, change approach.
yeah.
But you understood this. You understood because if you are saying it, means that you understood. Start doing what I did. Take everything and see how it goes. Forward test. Forward test.
Yes, that's the
If
thing that I'm going to do because I saw something and then I saw the opposite and then I ended up hesitating and then I ended the day without taking any trade.
right now, if you take notes about this kind of stuff, like this one, okay, these one are equal, whatever it is, right? And you start to see how many times the market is offering you this situation and how many times, based on numbers of reaction trades, whatever it is, it goes against you or in favor. Okay, you will create an edge. And anytime the same situation, it will happen to you over and over. Okay, you will manage that situation always in the same time because this is the trick. managing some kind of situation that you are able to recognize always at the same time. The problem comes when you change your way of managing things based on your opinion. Sometimes you treat this as a liquidity, sometimes you don't. And you are not creating nothing. You are just confusing yourself. All right. But the thing is, once you decide, because it's based on statistics, okay, you don't have to think about the outcome. You see this trade? I don't care. It's a strong, it's in my rule. It goes in a loss, fine. It's calculated. I know there can be a loss because nobody knows what the market will do at the end of the day. You know what I mean? But it's a rule. I respect it. Period. Okay. And if it goes in loss, it's a loss. Fine.
Okay, so keep continuing. So because I know in the New York session, so yeah, the price created equal highs. I can there you can stop. I can see here. So
Yeah.
okay.
This equal. This equal.
This these are equal highs.
Oh, this one. Okay. Yeah.
Are they like I'm just asking, but for me I consider it was equal highs. I don't know
Okay.
if it
For me, it's a strong. This is a strong. Took liquidity at this time frame. In 5 minutes, took liquidity. This is the example I was telling you before when I was
yeah
counting.
broke
Take
structure.
liquidity, broke structure, strong. Period.
Yeah, I have
This is
also
a range.
yeah.
This is a range. Of course, if you start thinking about this, what is this? A trend line liquidity. Okay. If the price now creates something like here, even more trend line liquidity.
Yeah.
Okay. But it's a never ending. Now, how easy it is, and think about this, how easy it is if you take all this stuff away, thinking, is this a trend line liquidity? Yes, but is this a strong? Yes. So now how you manage a strong? Do you have a alpha strong and shitty strong? No, we have just strong. So if it's a strong, always, period. Make sense?
Yeah, now it's making sense. Like because also that I was thinking that we create like something it has created the equal highs and then it ended up reacting on that structure that I didn't take. You can fast forward and then you see the result.
Right. That's all that matters for me. Having the rules and respect them all the time, no matter what I am thinking. And I was thinking I would lie to you if I'm telling you that I was not thinking like you do. I did a lot. Then I stopped. I simply said, because everyone is telling you, you have a rules, apply them, trade what you see, don't trade what you think, blah, 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 blah. But if you don't have the tools, that's the thing. Confidence comes with, in my opinion, confidence comes with, not with winning, comes when you have a solid plan and you respect it. That's when the confidence comes. Okay. And you don't care about the outcome. Keep doing it and keep doing it. Now, you have to test it, of course. You have to test your car. You know that your car can go till 200 kilometers per hour, and that's it. The beauty of the range for me, that I come from, I think I used all the kind of strategy that are on this industry so far. I trade Wyckoff, Elliott Wave, smart money concept, support and resistance, price action, just candles, right? Price action. And I also did only fundamentals. I used to trade only based on what Powell was saying during the conference, right? And then I end up with the ranges. Now, the beauty of the range, in my opinion, is that you have a box. Because if you think about the range, what is a range? It's a a box of price action. When you lock the box of the price action inside 2 points, you don't care about what was the past. You don't have to look to the left anymore. Okay, you just have to look what is inside your box. You have a key level or a POI or whatever you want to call it, and that's it. And it's done. And this is all your playground. Your playground is your range. Now, the range is at 15 minutes. At 15 minutes, you treat it as a 15 minutes range. Is in 1 minute, it's in 1 minute. Okay, so that's why I like the range, because in most strategy, I will say there are too many data to analyze, and I'm not so good on doing this, and I was used to be very paralyzed by all this data that was coming to my mind, you know. Mohammed, no, I don't care about the bias. I just trade the most recent range. Yes, if the range is short, I'll trade short. If the range is bullish, I will trade bullish. Yes, correct. But first thing first, I also noticed this, that a lot of people trade without having a range closer. I always need to see clearly, two QM, two opposite QM at the same time frame, okay? At the same time frame. Then all the rest for me doesn't exist. T1, T2, whatever it is, equal, strong that are equal, or whatever, I don't care. Okay, that's it. Okay, guys. So thank you for coming, for joining me, and I will do this more often if you think it can be beneficial somehow. Okay, let me know. All
Yeah,
right.
it would be nice, it would be beneficial. Don't know for others, but for me was thank you very much.
No, absolutely, anytime. Okay. See you guys. Thank you for coming. No, I don't use T1 and T2. I don't. No, I don't really care about them. I know how to recognize them. Actually, I studied them very close. I know the different kind of T2. I mean, I understood the psychology of the T2. I know what is behind the T2. I can give you different version and example if you want. But I don't. First of all, you cannot trade a T2 unless you don't trade them like I do. So because a T2, what is a T2? It's a phase of consolidation which end up creating new ranges. Now, if you trade every single range that you have on the T2, you will end up losing, but at the end you will win. Just to give you an example, short and long. Just to give you an example, okay, let's say that we have a bearish range, right? Like this, okay? So then the market, now, first, there are different ways of, let's say, to recognize the T2, okay? First, things that you need to see is, of course, you have a empty range. There is no liquidity inside your AB. You only have the QM. Now, many people don't recognize the QM liquidity. I do, because in fact it's a three candle formation. So if it's a three candle formation, it's liquidity. Now you will see many times that the price, what it does, take the QM and then break the structure on the opposite direction. Okay, so it takes immediately the external range of liquidity. Okay, so let me take that. So it will do something like this. Okay, now so the first things about recognizing the T2 is that you don't have liquidity here, nothing, or you can have like something like this. You can have immediate liquidity, okay, and then empty over there. But what you notice is that the price, even after taking this liquidity, is keep pushing up. Now, two are the things. If it keep pushing up, okay, meaning there is one to attack this, or is starting to create the inducement. Okay, what is the inducement? This is the inducement when it comes back. Why? Because it's the only available liquidity here. There is no other liquidity. Okay, So this is the first things, no liquidity. Second things that you can notice on a T2 is that the majority of the time, the inducement happens just before, a little bit before, either of a 50% of fibs, okay? So something like this, okay? Or it happens just a little bit before of your POI. One of the two, okay? And that's the second, I will say, the second point. Third one, of course, the price will do the failure swing. So will fail to take this low, creating equals, creating similar equals or whatever, right? In any case, we'll end up leaving here an order block. The smart money will see this as a place to place a bullish, a long position, and we'll leave another block right here too. Why? Because all the people that is thinking, okay, now the price is coming back because it didn't take this. So it's coming back to me. It lived here a nice order block. It was very impulsive. So now I go here. So, and the price will go, okay, over here. Okay. These people are now thinking, oh, you see, the price is coming to me after this impulse movement. Okay. So what I do here, I will go short. Okay. The price will give some kind of reaction, but we'll do this first, mitigate our high, and then breaking down. Okay. So this is the classic, I will say, T2. Okay. When basically your T2 is, of course, where your T2 is the inducement, right? In any case, you will have here a QM. You have a QM, so you have a range, okay? This one is gonna be your inducement, so the trap, okay? So the price will come here, go up and down. Failure swing, equals, and so on and forth. And this is the classic one. Then what you need to understand is that there are many different versions. Another version is when you have your range and the price start ranging, then create your trap, okay? But also is ranging right here, okay? Now, if there is liquidity inside the failure swing, you can manage this one as an internal range. So you will have your QM, and the majority of the time, this one that is normally your T2, because this is the failure swing, okay, will hold because the price have the liquidity inside, okay? So we'll take the internal liquidity and then we'll attack this area, okay? So these are the two versions. But now if you understand this concept, always look if inside the range you either have liquidity or you don't. If you don't have liquidity, always when you place your entry, think, I am the liquidity of the range. My stop loss is the only available one, and you have an answer. Okay. Because if we trade the range means that we believe that the price needs to move from one liquidity to another one. So it needs to take the liquidity. And if there is no liquidity and you are the first available liquidity, it will stop you up. Okay. Yes, Lorenzo. I'm sorry, Lorenzo. Did I answer your question of the T2? Yeah, well, I believe I do because you just asked me if I use it or not.
No, my question wasn't about the T2, was about when you say that if, for example, I'm on a 5 minutes time frame and my strong gets invalidated, all of the strong in that time frame, it's not more valid. So I have to choose a strong from the higher time frames, like 5
Right.
to 15 minutes.
Right. Okay. So I'll tell you this. I'll tell you something. Due to the fractality of the market, everyone knows about the fractality of the market, of course. Okay. This is the way that I used to divide the time frame to help me with this topic, right? Because we need to understand something. When I have a range, okay, I have QM, I have a strong point because this is a strong point, and the market take my strong, okay? Most of people end up doing, and now what? What I'm gonna do now?
Yeah, exactly.
What you need to understand, first of all, and this is another thing, okay, chalk, so chalk, okay, QM, boss, what else? What else do we have? Sell side, buy side, whatever you want to call it. Okay, all of this are the same somewhere else first, but all of this are liquidity. Okay, because QM is liquidity, BOS is of course liquidity, and a chalk is still liquidity, right? So meaning QM opposite direction, BOS opposite direction, chalk opposite direction. Now, why I'm telling you this? Because if you have a chalk, means that you have a QM somewhere else. Now the problem is where? Okay, where I have a QM that is going to validate my range. Because when you have a QM, what you do in order to find your range, you go back in time and you're going to find your most recent strong, right? So this is why I choose this time frame. Okay, and the time frame are daily H4. I don't know why I'm writing so bad today, but okay. Then we have H4, and I'll tell you why. Then we have H4, H1. Then we have H1. And you can make any kind of a test about this, okay? M15. And then we have M15, M3. All right? So in this time frame, you will find that a QM in daily is a chalk or a strong point took in H4, and so on and forth. So a QM in H4 is going to be a chalk in H1, and so on and so on and so on. So a QM in M15 is going to be a chalk in M3. To answer to your question, this means that, let's say, for instance, that I have something like this. Okay, so now I have a QM here. I have my strong. I have my range. Okay, and the price do something like coming from here. Okay, so we are bearish, long run. Now, when your strong is took it right there. Okay.
Yes.
You have two options now, and let's say this is 15 minutes. Okay. 15 minutes strong. Okay. Now, two things are happening. First one, you are having a QM on H1. Okay. So you have two options to recognize your most recent range. You can either go to H1 and find from H1 your strong point, or you are so good on reading the market structure that you will go back at 50 minutes and you will go where all the impulse has been originated, because this is a shared point between M15 and H1. Okay. The price create a breakout structure here. Originated means where the price start, the origin of the price that creates the breakout structure, the BOS right there. Okay. So you have two chances. Or you do this at M15, or you go in H1 and you're going to find, because you have now a QM here in H1, you're going to find your strong, your recent strong. Now, when you said all the strong get invalidated, yes, it's Now the strong are the liquidity. Okay? Because this one is the, if you are in M15, okay, this liquidity is visible on M15. But if you go to H1, because probably this is M5 and M3 and M1 liquidity, sorry. But if you go to H1, you don't see this one, you will see the strong, the M15, okay? Which they become the liquidity or H1 of the range in H1. Make sense?
Yeah, it makes sense.
Okay.
Absolutely.
And that's
So
absolutely important. So, but the things is, when you have a strong ticket, like in any other range, okay, we say that we have a QM, yes. And we also now know that because for the theory of the range, right, when you have a two opposite QM, you know that the price made a low in this case, okay, and it's telling you, wait a minute, I'm not going low anymore for a moment. I'm going to take what? I'm going to chase for the internal. But what
okay.
we don't know, we know this, but what we don't know is up to what. And that's why I don't believe people who, based on this QM, place their entry here to chase the internal liquidity, because nobody knows which is the liquidity that the market will take. We only know that it's going to take the internal, but the market doesn't take sometimes all the internal. Sometimes it does, sometimes it does not take all the internal. Okay, so we can only recognize if we have internal liquidity or not. If we do have internal liquidity, all our job is to find a POI and wait for the price to hit our entry and then target in the external, right? And that's why the range come in place and save our ass all the time.
Okay.
Okay.
So for example, no, so I can know if I understand this concept. If you can go on the Nasdaq like 5 minute chart,
Yeah.
I'm quick. I will be quick.
No,
I
no
promise.
worries. Yeah. Let me delete all of this. Yeah.
Okay. So if you stay like this, exactly like this, I
Mm-hmm.
can see that this was my strong.
Mm-hmm.
Okay. Then the price
Yeah.
go back and to go up and make another strong. When this wait, sorry, uh, like this. Okay. When this strong gets invalidated, this one
Mm-hmm.
in my 15 minutes chart, the strong is this. So all of this one is liquidity, right? So
I don't agree for the fact that here you have a major break of structure. Okay, so this is, you see this point right here?
yes,
Okay, this point is the origin of this impulse. You see it?
yes.
Okay. Why is the origin? Because here you have a break of structure right there. Okay. So
Okay,
I
so
will refer to this point as your strong right now. For your, now the relation between M5 is, yeah, this is the origin of all these impulse. So this is basically what I will refer in order to see, okay, I have internal liquidity, yes. Okay, so this one is gonna be my, probably this is the breaker. Okay, and this is my
okay,
area for reaction. Okay, I don't expect, of course it can, but from here, after taking this liquidity, I will expect a reaction. And you have the range.
okay, okay. I missed
Makes
because
sense?
I saw this like a three candle and I took
Mm-hmm.
this was my strong point. Now
Mm-hmm.
when he broke this, I took this range from here to here, and this was
Makes
my key
sense.
level.
Yeah.
And I placed my order here with the target here, and I But if you say that this is
Yeah,
my
once your strong is broken, you don't have to get lost. You just have to refer. You right. So right now, let's say you took a loss here, right? So once you took a loss, it's the way you manage your next situation. Then it's all about. And to not get lost easily, you need to have a new range. Now you know that the price, because this is what I'll tell you, right? So the price doesn't do what we think. Okay, so now to this one, your range is this is higher, is bigger, let's say. So perfect. Now you have your range. Okay.
okay, my exactly. I was confused because if we say that if this is my 5 minutes strong and
Mm-hmm.
it was invalidated, I think that I have to choose the 15 minutes strong, and it was like here. So I think that this was also my liquidity.
Right. It can be. It can
Okay,
be.
ok,
Okay.
ok.
It can be.
Non sono bravissimo in inglese, però penso di essere farmi capire anche dagli
Sì,
altri.
sì, 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 perfetto.
Ok,
All right, guys. Yes, Daniel. I record this call. I will post it, of course, on the Liquidity University. All right. Okay, guys. Thank you again. And see you next week eventually. Okay. If you, I mean, I used to be very, I will say, technical. I like to give name to things and exploit everything, because it's gonna take stuff more easy. Okay. Once I know, and once I'm able to give a name to something, I'm able to master it. If it's not, I'm lost. Okay. All right, guys. Thank you for your time, and talk soon. Bye.